Now that all the companies in the competition have pitched, and while we're calculating the results and waiting for the winner to be announced, you can watch our traditional AgriVest Investors panel. This year, the speakers will try to draw a broader perspective and examine the industry in the past decade while setting their eyes on the future and discussing the trends. I'm happy to invite the panel's moderator, Gideon Soesman, co-founder and managing partner at Greensoil Investments, and the speakers, Dr. Philip Erlanger, managing partner, Pontifax AgTech, Dr. Stefan Tresch, head of AgInnovation and new business of head global R&D biologicals at BASF, and Sedef Köktentürk, managing partner and the chief operating officer of Blue Horizon. And last but not least, Yoav Hineman, partner at Fortissimo Capital.
Hello again and welcome back. My name is Gideon Soesman and I'm co-founder and managing partner of Greensoil Investments. I'm super excited to moderate the AgriVest Investor Panel once again. I think it is the 5th time this time. I'm even more excited to have 4 great investors joining me today, each with a very different investment focus. Sedef Köktentürk from European-based ag and food tech fund Blue Horizon, Phil Erlanger from Pontifax Ag, a large AgTech fund from the US, Yoav Hineman from Fortissimo, a large Israeli PE fund, and Stefan Tresch from BASF, one of the largest global agrochemical corporates. In the next 20-25 minutes, we're going to talk about the investment climate in AgTech. We will look back at the last 10 years in our sector, but obviously also look at the current trends and look forward to what we believe the future will bring us. So guys, welcome all and thanks for joining us. Phil, let me start with you. You've been investing in AgTech, I think, for almost 10 years. So out of that perspective, what has changed over the last 10 years? What did you expect when you started to invest in AgTech and what are you seeing today?
Thanks, Gideon. It's been a remarkable 10 years. The sector over that time has gone from undiscovered to one of the more vibrant sectors of investing under a broad ESG dynamic, as well as the market exploding and a clear definition of a variety of new things that have started to really impact investors. We've seen, what was originally a focus on data and using data and automation on the field in farming to a much more comprehensive approach to a vertically integrated food and agriculture system. There have been some things that have come and gone, and there's some things that have really continued, and then there's some new, very exciting areas. I would say, broadly speaking, precision farming and the use of data has proven to be difficult because of the barriers to entry and the ability to establish a real value proposition for farmers that's been compelling and consistent, along with slow adoption in the sector. Life science has been, and we believe will continue to be, very core and central to the sector, up and down, production agriculture down to human nutrition. And then we have some new things that are starting to become very exciting that take us more into the food sector, which really is starting to integrate biotech under a broad approach of food as medicine. And the last major area that we're starting to see and generate significant momentum is the whole shift in consumption and the direct distribution to the consumer, both e-commerce and fulfillment and grocery, and how people are starting to acquire them. So, it's been a dynamic sector. We think this is, still relatively early innings, and some of these new themes are going to, create huge opportunities for us as investors.
You're saying it's very early, so you think it's still going to get bigger than it is already today?
Yes, I think we can talk separately about the influx of capital and valuations, but in terms of adoption and the importance of technology across life sciences, software, hardware, and all the other dynamics that go into creating more efficiency and sustainability at the adoption level, operationally, yes, we still think it's early.
Thank you, Phil. Yoav, let me move over to you. You too are a very seasoned investor. You've done a lot in very different sectors. And then as a firm, you decided to look at AgTech. Why AgTech? And when you compare to all those other sectors, what is different for you when you do deals in AgTech?
Thank you, Gideon. So for Fortissimo 4 or 5 years ago, we made a strategic decision. Or strategic initiative to get into AgTech. The reason was really a combination of the positive secular macro trends that we all know, as well as Israeli expertise that exists in some areas of agriculture or agricultural technology. And the fact that it wasn't as crowded from investor standpoint, obviously many more investors that are investing in technology, etc., in Israel. In addition to it, it's also the fact that I'm a kibbutznik and I grew up as a farmer and I have a passion for agriculture. But that's really what led us to get into the field. We did the comprehensive work. We really mapped the entire market and decided, like I said, to get into it strategically. The challenge for us was that we are private equity, and we couldn't really find companies that are mature enough for us as private equity. We like companies to have potential revenues and really don't want to take the risk of market and technology, or market and product rather. And that was the challenge. And in order, and what we decided again strategically to do is really to go lower and get into earlier stage company situations, but still make sure that the companies that we invest in, even though they may be pre-commercial, but that the product and the technology are proven, it's really just execution time, and that is what we did. So that is a bit different for us, kind of how we view it. This is changing because there are so many kind of venture or early stage investments now in agriculture in Israel. We think that going forward, you will have more mature companies, and this will actually be a good market for us to participate in for, again, more mature companies.
Are the companies very different from the other sectors you're investing in?
We like you said, Gideon, it's we invest in different sectors, so each one is different. I think that it is like, if I have to compare between like industrial companies that we invest in, like kind of classic buyouts, to kind of the more we do classic buyouts and we do special situation growth, I'd say it's similar to the special situation growth. I think it's maybe a little more difficult to find good talent, not so much on the R&D. I think you got very strong people on the R&D, but on the commercial side, on the go-to-market side, it's a bit more challenging right now, and I also think this will change over time. But other than that, no, I don't think there's many other major differences.
Thank you. Stefan, BASF, large corporates that I mentioned before. So what are you looking for when you are working with smaller startups, and especially smaller startups from Israel?
Yeah, so focus is agriculture and helping the grower to produce crops. Yeah, so therefore, if you ask me what I'm looking for, what we're looking for as the BASF division for agricultural solutions, we're looking for startups that working on products that help the grower to improve yield. Yeah? Maybe in earlier times, we were more focused on trying to identify technology platforms we can partner with I would say, and we had that conversation, what happens in the last 10 years. And I would say that's a bit of change, maybe in the startup community, but also in our approach. So we're more focused on trying to identify entrepreneurs that have visions or have new products in mind they would like to provide to the grower to help them to achieve either higher yield and better quality, or even help the grower to achieve the sustainability or lower the carbon footprint of the farm.
No, Stefan, that's great value for startups. I have to tell you honestly, for us venture capitalists, sometimes it also makes us nervous because you're trying to reach your corporate goals. Yoav, in your portfolio, when a company has an opportunity to work with a strategic, or even a step further, if a strategic wants to invest, what is your advice to the startup? Specific stage they should do it, they should not do it?
We actually have BASF with us in one of our companies. It's our advice is typically to do it. We always want to make sure there's obvious benefits. You always want to make sure that there's kind of no string attached, that it doesn't give the investor any special benefits or rights that will limit the company in any way, shape, or form in the future. That's very important. So overall, it's certainly, it's something that we view very positively, is to getting strategics that play in and around our space, that can help out with different initiatives, on the go-to-market, on the marketing, and even on the development. So it's certainly something that we view very positively.
And Yoav, so maybe I comment on this.
Yeah, go for it.
You had a very interesting point that the startups are independent, and to be honest, that's also something which I like, or which we like, because if we guide them too much in a certain partnership, so then we help them eventually to produce a product which is extremely similar, which we also have, or we can also do on our own. So what is important, that those entrepreneurs really follow their ideas and develop their own products, and not do what the big corporates tell them.
Sedef, I know Blue Horizon is very active in the ag and food space, and I also know that for you the ESG angle, the impact angle, the climate angle, these are all important angles for you guys. Tell us a little bit more about it. I mean, how important is this becoming, and is this like, I don't want to sound cynical, but sometimes it's seen a little bit as a lip service, or is this really an important part of the value creation?
Hi, Gideon. Thank you for that. Actually, just a few weeks away from COP26, where the world is starting to focus on climate again, and we've done quite a bit of research around sort of the impact of agriculture, including forestry and land use. And it's the second largest emitter after energy. So the energy is 34% of total CO2 emissions, and ag, forestry, and land use is 24%. And that's about 70% larger than impact of transport. So that's 14%. And if you think of the amount of capital that has gone into electrical vehicles and the transition to a more sustainable transportation system, ag is way behind that at the moment. So this whole transition into a more sustainable agriculture and food system will both have quite a bit of opportunity, as Yoav and Phil already mentioned, but also make much bigger impact on the environment and the climate crisis. We look at impact in ESG slightly separately. We think of impact as the impact of a company's products and services on planetary, which is climate, which is broadly climate, human and animal health, and and ESG as the way a company executes sort of its operations. So from an operational perspective, which also includes environment, and therefore sort of the company's own footprint, as well as the environmental footprint of its products. Sort of that's a double impact in terms of on the climate. We believe that in COP26, and it's already been mentioned explicitly, food systems is going to start getting a lot more attention, and that will only have a more positive impact on the interest in the market and the interest in this accelerating the transition to a more sustainable agriculture and food system. And obviously, technology is the primary accelerator in that.
And how are you dealing with that when you look at an investment case? Are you merely looking for an impact, or do you demand the companies you invest in to measure it themselves? How deep are you going into the impact measurement?
No, thank you. We actually have a dual mandate in our minds. So we want to maximize both financial returns, which our target is 3 to 5x, depending on the fund strategy, and we equally want to maximize impact, again, from planetary, human, and animal health perspective. And we don't try to optimize between the two. We try to maximize both. So we use the impact ESG framework at different stages of the investment process. At due diligence stage, we want to make sure that we're not, we're aligned with the company that we're speaking to. And as we get deeper, we go from more qualitative assessment of the impact of the products and the ESG credentials of the business and the management team. And as we, get closer to, or after we make an investment, we get much more quantitative about it. You're working with environmental scientists doing a life cycle assessment on the products.
Phil, when you gave your 2-minute overview of 10 years in AgTech, I didn't hear anything about impact or ESG. Is it something that's on your agenda as well?
It's absolutely central, and I agree with all of Sedef's perspective. I think this sector has the benefit of just having ESG intrinsic to the efficiency and the kind of the core dynamics around economics of building a business in the sector. So I think one of the things that originally attracted us to the sector when we started building the business was absolutely sustainability. It is now so front and center that it seems to kind of be a starting point. But I think a strong case can be made that, from the beginning, agriculture is one of the great, resource users as a sector on the planet.
If I may add, actually, it's one of the, the UN Sustainable Development Goals, there's 17 of them. And food and ag space actually touches on each 17 of that in various ways. And it's one of the few sectors that actually can tick the 17 boxes. So from that regard as well, it's extremely important from impact perspective.
So Stefan, for you as a large strategic corporate, how much is the whole impact discussion influencing what BASF is doing, and how important is it for your stakeholders?
Yeah, thanks, Gideon, for this follow-up question. And indeed, it's a very important part of what we would like to deliver to our customer, to the grower, and why. So what we have is, or what we would like to deliver, we would like to help the grower to have a better yield. And better yield for us, that's not just improving yield, it's also to lower the impact on the environment. Yeah, and there we have very clear corporate goals to lower the CO2 footprint, to achieve our sustainability goals. And that's exactly the reason why we're very active to looking to work with other partners, to work with startups, and also to work together with our venture capital arm to identify potential companies we would like to also invest in, and then develop partnerships, because that's so some of those technologies that are needed to achieve our sustainability goals is not something we have readily available or even available in our company. So we need tools and even complete product concepts which we can develop with startups or with venture capital leads.
Time flies when you're having fun. Let's just move on to another subject. We spoke about the importance of climate and the importance of impact, but at the end, we have these LPs that also want to see us make money. So Phil, exits, is it lagging behind? A lot of money going in, but not yet coming out. I mean, you've done some excellent exits, and congratulations on that. But overall, the sector, not too much to celebrate. So are we just waiting there for it, or do we have a more structural problem?
Well, I think we would all around the table note we're in a vibrant investment market that has attracted an enormous amount of capital to the sector. I think I would go back to my earlier point, Gideon, which is fundamentally, this sector is far behind on sustainability, efficiency, and kind of the application of technology that needs to happen. There is a marketplace that's eager to support that with proven businesses. There are strategic acquirers who are eager to acquire the capabilities of good, important technology in the sector. But we, having learned both, in a positive way and all going to school as we do as investors, learning every day, the adoption cycle and the speed of growth for many technologies in this sector as part of building big businesses requires patience and is longer term than most people see in other sectors, and certainly in a world of B2C and internet-driven technologies. I think this is a matter of when, not if.
It sounds you're very optimistic, and mostly you're talking about the strategic angle for an exit. Sedef, what about you? You're mostly looking at strategic exits, M&As. Do you also see an IPO window?
IPOs, but also we're seeing sort of SPACs also taking a role in this, and not in maybe AgTech, but in food tech space, we've seen a number of initiatives on the SPAC side, but that exit market is, I guess, yet to be proven, right? So,
some say it yet needs to be proven. Others say it's dead already.
And that's another way of looking at it. But and that's an area we're also trying to understand. But in terms of exit, we're as Blue Horizon a relatively young company, and while we're a financial investor, we've actually invested quite a bit of from our balance sheet as well. And on those ones, we prefer not to exit. So our funds are sort of newer vintage, and so we don't actually have any exits in those. But we've looked at investments actually where we see SPACs become a competitor on deals. So rather than doing another round, companies are actually, not being ready for IPO, they're going into SPACs, which has come up in a couple of cases.
Yoav, what do you think about this? To SPAC or not to SPAC? And Stefan, I see you smiling. You probably think no SPACs, no IPOs, just come to us and we'll buy you.
By the way, I feel very differently about IPOs, just to be clear.
Okay.
Sorry.
No, that's fine, Stefan.
Yeah, that sounds too easy, Gideon. And with the specs, so I'm also not an expert on this. So the specs that I thought, okay, they're burning a lot of money at the beginning. Let's see what comes out of it. So therefore, I'm a bit skeptical, but more from a practical point of view. And if someone would like to convince us that we engage closer with someone, so then it's with a new product or a new product concept. So that's what I'm looking for.
Right, but for the big guys, I mean, a lot of large mergers have been going on over the last years, and I mean, the whole market was waiting for that to happen and to be completed, which now has happened. So, I mean, you do not represent all the big seed companies globally, but do you think the bigger guys are now going to do smaller acquisitions again?
Yeah, so acquisitions they haven't been out of scope also not in the past, and that they are always under considerations, and I think that's common in all the big players. Yeah, so that's a constant effort to identify what are relevant acquisition targets that can help us to strengthen our portfolio, and I think that's true for the others as well.
Got it. So we're getting to the end. I have a few more small questions. The only rule, you have maximum 10 seconds to answer the question. Stefan, most challenging thing doing business in Israel?
I have to say it was always fun to to work with the Israelis, yeah, and therefore I not see any big challenge. For sure, negotiations with Israelis is interesting, I would say, but I like it.
Sedef, coming back to you, most challenging.
I mean, I second Stefan. It's a market I enjoy dealing with. Culturally similar. I would say it's also a market that's super high on technology. So it's actually keeping up with the new things that are coming up is both exciting but also challenging.
Phil, Israeli company in the space we need to watch for next year.
May I keep my remarks general as opposed to specific?
You may, but we may edit it out.
I think for us, the opportunity in Israel continues to be something we're very enthusiastic about. For us, the challenges have been the size of the immediate addressable market and the maturity of the companies, and coupled with scale and valuation today that have made it more of a challenge. We're looking at a number of things that are in automation and robotics, where we feel like Israel has, best in class intellectual property and businesses that we're very excited about today.
Stefan, who should approach you? What kind of company?
Oh yeah, so a company having a new product in mind, helping a grower. Yeah, so I'm always love to discuss with them and find them opportunities together.
Yoav, how many more AgTech investments are you going to make next year?
At least two.
Two?
At least two.
At least two. Wow, out of?
Probably all together at Fortissimo, I want to say 8.
Wow, that's 25%. So you're really bullish.
I'm bullish. It's either food or ag.
Okay. Sedef, are you going to make new investments in Israel next year?
We're looking. I mean, we're especially excited about the developments on the cultured meat space in Israel and I guess Singapore on the other hand, sort of being the two leading countries on this. So.
Fantastic. Well, that brings me to the end. I think this was pretty exciting. So Sedef, Phil, Yoav, and Stefan, thank you so much for all your observations and inputs, and hope to see you next year, definitely in person. We're not going to do this virtually anymore.
Great.
So see you next year in Tel Aviv.
Great.
Thank you very much.
Thank you.
Thank you.
All right.
Thank you all for sharing your perspectives. That's it for today. I would like to thank all the speakers and all of you for attending. I hope you enjoyed this year's AgriVest. All the summit's content will be available at the VOD section on the platform. I invite you to join us tomorrow for the third day of the summit. where you will be able to watch 40 Israeli agri-food companies giving their short pitches. You can also find them at the Summits Expo and virtually meet them face to face. We very much hope that next year we will be able to meet in person. Now the moment we've all been waiting for, the live announcement of the winning company in the competition. Along with the organizers of AgriVest, I would like to invite Itai Jetenli, partner of EY, and Ofer Ben Yehuda, partner of Shibolet Law Firm.